Wow, we got a lot of different roles within the financial world. You might hear the words certified public accountant. You might hear the word certified management accountant. You might hear the word financial analyst. You might hear the word payroll analyst or payroll specialist. What are some of all these terms and what do they actually mean? How they impact you? So, welcome back to another episode of John the PM, where we believe that managing projects is not just a job, but a way of life. And like I just alluded, what we're going to talk a little bit about are the various titles. Not all of them, certainly. Some of the more common ones that you may kind of run into and why you may need to pay attention to them and heed the advice that they may give you. So the first one is going to be CPA, Certified Public Accountant. Most of the time, the public accountant, the certified public accountant, is really kind of focused mostly on tax, preparing the books in accordance with tax codes, and audits and compliance. By de facto, because they see the finances, they usually have a really good understanding of how the entire business enterprise works. Why? Because they see the dollars, and they can kind of and the numbers, speak to them. That's a kind of accountant that you want. They should be able to look at your numbers and say, "Oh, it looks like you're doing about this. It looks like you're doing about that." But they are highly focused on the tax consequences. What does that mean to you? Well, the first thing is, at least in my mind, is that really there should only be one book, and most of the time, all the time, they should be kind of set forward in accordance with the tax code. So that's just kind of the very, very first thing that I would kind of look at. Now, there are different kinds of accounting. There's public accounting, meaning publicly held companies. There's government accounting. Government accounting, that's a whole nother beast, and they have specialists for that because the government looks at things slightly different. So it is important that when you're talking to an accountant, if they're on the government side, in particular, if they're on the government side, actually asking them, what does this mean to me? So just because funds obligated doesn't mean that any cash is actually left the bank or anything, or that the vendors got paid. It just really means that the funds are obligated, and so therefore you can't touch it. For example, I just kind of throw that out there. But they'll help you out with your indirect and your direct rates and kind of explain to you why that is important. So we covered public, we talked about government accounting. Let's talk about CMA, Certified Managerial or Management Accounting. Now, I am biased towards that group of people because I happen to be one. And what we, CMAs, really kind of look at is the internal workings. Think of it activity-based costing. So while the books are kind of presented, at least, publicly forward, in accordance with the chart of accounts, we might break it up more into the activities, usually by the groups and by the entities, and really kind of understanding how they're actually using their money, which way it's actually flowing, inside about developing reports that say, if you do this, this is what's going to be the impact, looking at the cash flow. So to me, that's very beneficial and very valuable. You can ask certified financial, accountants. Again, they're kind of looking at the financing of the organization, where the money is actually coming from. Is it coming from debt? Is it coming from equity? Is it coming from, operations? How that's all working. Payroll specialists. Or payroll accountants, whichever terms we want to kind of use. These are people that really kind of keep up with payroll. Now, as you should recall from all your training and things, that, really personnel decisions are held at state level. So each state has its own tax code and the implications thereof. And so it would behoove you to have, really good understanding of, how your state is actually handling tax, payroll tax, and how that's actually working with workers' comp. Especially if you have a lot of labor, that's coming through your books. You really do want to have a really good understanding of that. AP, accounts payable. Okay, they pay the bills. Accounts payable. A lot of times, those accounts payable folks, they'll get the bill, they'll get the, they'll try to match it with invoice, purchase order, something of that nature, and also proof of receipt, to a match, in order to make sure that this is a legitimate bill in order to pay out. Now, your more astute areas, AP folks, they'll be kind of looking at trying to maximize their cash flow by paying as late as possible. Why? So that the individuals who are actually investing the money, they have more time to invest it. So you might see some of them working towards that. Accounts receivable. They receive the money. Okay, so they receive the money. That can be broken up into several different areas. You can have your credit manager. Your credit manager is actually seen as the client worthy of credit. In other words, will they pay their bills? Will they pay their bills on time without a whole lot of effort? Last thing you want to do is a whole lot of work and you don't get paid. So that's why you have the credit manager. Now, on the receivables, a lot of times they're kind of keeping up with when the bills are due, when the money is due back to them. And usually kind of work pretty closely with sales. And what I mean by that is that depending on your organization, of course, you want to be careful how you manage, your customers. So a lot of times they'll, if there's a good solid relationships, they have like 30-day terms or something. They may send a friendly reminder, on day 31 and then, day 45, day 60, whatever may be the case. Of course, they may, offer some kind of a discount in order to get the money up front, then you also have financial analysts. Financial analyst, that's probably the broadest one. And honestly, the best way to look at a financial analyst is that basically ask what their pay rate is. You can be a financial analyst making, $20 an hour. Okay, I'm just using numbers. Versus a financial analyst that's working on Wall Street investment banking. That's probably, maybe making $250,000, a year. You can obviously tell, from a salary that, those are two very, very broad spectrums, and they can actually both be called financial analysts. And what they're kind of looking at is the nuts and bolts, from usually with an Excel spreadsheet. So they live in Excel land and developing their IRRs. And now, so those were, some of the people. There's a few more. But again, I'm trying to kind of keep this short and light. So when you pull it all together, you're going to have two major areas. You're going to have your financial controller and you're going to have your treasurer. Okay, so your treasurer, that is the individual that disperses the funds. Okay, they disperse the funds. They kind of like write the checks and say disperse. Okay. And then you have the controller. Controller actually controls accounts for the money. And then they may roll those up into a CFO, Chief Financial Officer, that kind of manages that whole spectrum. Now, in previous episodes, I kind of talked about the difference between big company, large, and small company. In a big company, I would almost look at that entity as an entity, okay, that function. In other words, if they were being outsourced, they're, you're one of your big eight or big four accounting firms, kind of like do everything. They just do it internally. If you're a smaller organization, a smaller entity, you may have, one person doing like 5 or 6 different things. Key thing that you do want to watch out for is segregation of duties. Okay. Why? Because collusion and fraud, things of that nature can occur. So you don't want the person that's writing the invoice to also, collect the checks, or writing the purchase order, writing the checks because they can write it back to themselves. So you do want to have good, solid segregation of duties. And of course, as the owner of the entity, you do want to make sure that you see all the financial transaction or have ready access to it, and making sure that you understand what's happening or what's not happening with your organization. Wow, that was a mouthful. What does that mean for the project manager? Well, the very first thing is make really good friends with your accounting team. I've never met an accounting team that did not say, wow, thank you for asking us up front. Okay, they're all ecstatic. Why? Because they know they have to deal with everything at the end. So it's better for them to get on the front end, have everything worked out, and then kind of move forward in regards to that. But it is part of your job to kind of understand what it is that they're actually trying to do. They're not your enemy, okay? But they really do want everything to work out well. But they do have certain prisms that they look through. So that's the first thing that I would do. And then on a smaller individual basis, you kind of do this at your own home. Just as a matter of fact, you have all those functions. They're just all wrapped up into the family, into the family venue, at that point in time. All right, so enough on the different roles. Again, like I said, there's lots of different roles that are out there. It's a good idea to kind of get a good idea of what they actually do. And I would encourage you to really ask those questions of your own team and see how they're set up. Hopefully you enjoyed this episode of the finances. If you did, hit the like button, hit the subscribe button. Help us to be a better service back to you. In the meantime, may all your projects be successful.